You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
G'day guys, welcome to another episode of the Perth Property Show. As always, I'm your host, Trent. And just remember, if you've got any comments or questions, you can post those on the Facebook page, or you can head over to perthpropertyshow.com.au and record that question straight up. Today is a very special day. We are talking market updates, and the only person I ever want to ask about this is my favourite property commentator in Perth. It's Brendon Ptolomey from Heron Todd White. Thanks for coming in, mate.
Good morning, Trent. How are you today?
Yeah, good, thanks. I'm excited, a bit nervous as well to hear what you've got to say. I think we all are. I think that's a feeling in the market right now in Perth, where a year ago we had high hopes. We still have high hopes, but the longer it takes for us to see evidence on a broader base, the more nervous we become about whether those hopes will be realised.
Yeah, and I think there's probably a feeling of the market, waiting for the market to wake up. I think we started the year, lots of commentary around not another year of a downturn in our market, and another year of a slow ebbing away of property values. Obviously, we've had some interest rate cuts, we've had the serviceability changes, and suddenly there's a little bit of activity and a little bit of stirring in the snoring that's been going on in our market. It's going to be interesting to just see what happens next, and it's really difficult to call right at this moment.
Isn't it interesting the way that we're talking now, how we were talking a year ago, when I think the theme of our chat a year ago, which I think was very much before the real effects of the Royal Banking Commission and the Bill Shorten parade came through, it had some legs about it, that the optimism we had, there were some real reasons for it. And then we've just been twice bitten, 4 times shy, I'm sort of saying. And we're all just a bit waiting to see, hopefully, where things move. Is it a case of still the smart money moving first? Are you still seeing optimism and real numbers starting to push through at least above the median house price?
Yeah, there's certainly some optimism signs coming through. I talked to an agent a week or so back who had been surprised by 80 people coming to 4 home opens on a weekend. And when we start hearing those stories, and when people come up to you at kids' sport and footy, netball, hockey, those kind of basketball, all that kind of stuff, and start telling me stories, that's fantastic. That means that there's some grassroots there in terms of some activity.
Is it stuck in the western suburbs though still?
Yeah, I think it is still sitting just above the upgrade buyer type activity.
Like a mil plus?
Yeah. So and it's really interesting that we don't have any overwhelming transaction activity there too. So we've got the looking. Yeah. We've got some transactions starting to flow through, but there's no wave of transactions coming through. I suspect that comes in September when spring is sprung, West Coast have won a flag, and everyone comes out of... oh, touch wood. And everyone comes out of that winter hibernation. But
it has been a hibernation, hasn't it?
Yeah, it
both
feels
on the
a
selling
lot like that.
and the buying. I just feel like the transactions have been so much lower than last year.
Yeah, and you talk to any good agent right across the market, and they'll tell you it's been a struggle. So we hope that people are still tuned in and listening, because we have called the bottom of the market a few times. Yeah, and that essentially, if you keep saying the same thing, people stop listening. Yeah,
you say you're the boy that cried wolf.
Yeah,
I feel like we did hit the bottom of the market. I don't think we've been eroding ridiculously like we were 2-3 years ago. I just don't think we've had any strong evidence that we've come up from the bottom of the market.
Yeah. So some of the other little signs we're seeing at the moment in our business, we do a lot of mortgagee in possession valuations, and that's where the bank have got a customer that's in trouble and they need to dispose of that property or sell it or do it up. And the banks have become very good at managing that. And so we often do a number of valuations on the same property as they adjust it, as they either fix it up and sell it or look to get the best outcome.
They're not fire selling like they used to.
No.
They seem to have a pecuniary interest to not undercut their client being the owner who may have had a bit of equity left.
Yep.
Even though they couldn't pay the mortgage.
Yeah, so they're trying to find the most amount of capital back out of that property for their customer. Yep. And obviously they're using us to peg whatever the market value is and trying to sell it above what we value it for. That's always kind of the challenge we set them.
Frustrating for me as a buyer, because you always like as a buyer's agent to find a mortgagee in possession, because you think, ooh, this is going to be an easy one for me. Yep. I feel like the last year they've just become more responsible, the banks, in that way, and they don't make it as easy for us as on the buyer's side in just grabbing these fire sale properties. It doesn't seem to be possible. If they can't sell it for what the valuers think it's worth, they just aren't selling it.
Yeah. And so, to what does happen there is we'll revalue it after it's been on the market for a little while.
Yeah.
That will demonstrate that potentially the market didn't like that property for whatever reason, and we would go back and value it and say, hang on, it is still drifting south in terms of value. But the reason I brought up the MIPs is that we're seeing those sell quicker than they were in the past. So if we go back a year ago, we had a number of properties that we just kept revaluing and essentially following the market down. So we do a valuation, peg it at, say, $200,000 down in the southeast corridor. We think we've got that number pretty right. We walk away thinking it's going to sell around that price, and we come back 3 months later with an agent saying, hey, look, no one has come for this, and the new sales evidence is saying that everyone else around us is discounting harder than we are. Can you revalue this and tell us what it's worth now? And unfortunately, what you're doing as a valuer there is saying, well, the market's gone down. And we got down to things like 170, 160 on those types of property. And
not as much now.
Yeah, they're not discounting. Yeah, exactly. We're not correcting those as quickly. And most importantly, those MIP properties are selling.
Oh,
so the buyers are coming for them as opposed to them just languishing on the market.
Another factor for me that I am hanging my hat on right now, given that it's still early days since the serviceability assessment rate changes and the interest rates dropping, the one leading indicator in any market for property where we're finally seeing some positive news is the rental vacancy rates. Rental vacancy rates for everyone out there are a leading indicator because what happens when the prices go up based on the vacancy rates going down, tenants then have the opportunity in their head to think, well, maybe I'll enter the market as a buyer, and therefore that adds demand on the demand and supply curve of house values. It also allows investors to lend more because their proposed rent can be higher based on their finance application. So when rental vacancies drop, which they have, you're going to give us the stats in a second, Brendon, I think it's from 7% down to the low 2s. Now we're at a case where, because of that, you've got reams of people coming through tenanting these places out very quickly, whereas a couple of years ago it was a case of how cheap can you rent it for just to get someone in. Now we're at that situation, obviously, where rents are starting to increase, and that's that first leading indicator, that green shoot that I'm seeing as a result of such a lack of construction in the last 4 or 5 years. When people finally start to realise their bank accounts having a bit more disposable income and the banks start to lend for that bit more, we've hopefully got that opportunity for a bit of credit growth on the demand side, and therefore people just feeling a little bit more confident because everyone's letting them play ball. Yeah,
look, the rental side of things is really interesting to look at. So median weekly rental has gone up in the June 2019 quarter. Overall, it's $350 a week. Median unit rental is $330 and house rental at $360. So they've come up from about $320, $310s. So you are looking at a half decent jump. As you say, vacancy rate gone down. The other really big factor here is people looking for a return on their money. Let's just remember that capital values of the product that they're buying have gone down. Rentals have gone up in that same period of time. So if you're starting to look at that yield equation, things are starting to look pretty attractive, especially when you look at the return you're getting for cash in the bank.
Brendon, I'm saying to everyone right now that if you haven't got a positively geared property from buying today, there's something wrong. If you're at a 3 and a bit % interest rate and your rents are starting to grow from what they were before, there's no reason why most properties in Perth now shouldn't be positively geared, which is at least some relief, and again, for disposable income side for investors, to be able to start thinking, well, look, it's not that hard for me to hold these properties.
Yep.
What that also does is mean that these people don't have to sell, therefore we have less properties on the market, and we've got some data on that as well about properties sitting on the market.
The listing numbers are coming down week by week at the minute, which is absolutely fantastic to see. So same week last year, 15,500 properties on the market according to REWA. 4 weeks ago, 14,751 properties on the market. This week, 14,242 or 14,250. So you can see those listings drifting south. Now, admittedly, this is a time of year where listings often drift south because people that haven't sold their property will take it off the market and relaunch in spring. So a September, October type relaunch.
But we're talking year on year from last winter,
so we're down 1,000 properties year on year. So that's a great comparison. 1,000, it's 1,500 actually. So seeing that supply ebb out of the marketplace is really, really good. Now, admittedly, some will be people that have taken investment property off the market because they've secured their tenant. These are all really good signs for putting a little bit of pressure back on our marketplace and back on buyers to make a decision. So When you look across buyer profiles, investors getting in the market, good idea at the moment. First home buyers getting in the market and buying established product, good idea at the moment.
Never been so cheap.
It's really cheap.
Both to buy and to pay off.
Yeah, and then the upgrade buyers gets to be a slightly more difficult conversation, but really that's a pragmatic conversation mixed with emotion, whereby you're saying, right, you understand what your suburb's done. It's probably levelled out. You know now there's probably an opportunity coming up to sell that because there's some liquidity in the marketplace. But you will be buying in the neighbouring suburb or the suburb that you desire at more than likely the cheapest it's going to be for a fairly long period of time.
Yeah, very true. And I guess our next question is, whilst it's good to recognise there are some economic fundamentals as to why things won't be going down on average for most suburbs, hopefully going forward, what we really want to hear is why is it going to go up? Because there's no point investing in something if it's just going to be the same value in 3-4 years. We may as well just wait 3-4 years until that point, and then we invest in it if it's going to go up then. So why would property in Perth go up in the next 2 to 3 years, which is what at the minimum of what people would want to hold property for? At a very minimum, most properties should be held for a good 2-3 cycles, in my opinion, to really get the most value out of it before depreciation of the property becomes a negative factor.
Yep.
But what are we looking forward to? What are the real factors that will bring prices up?
I was lucky enough to be at the API, the Australian Property Institute Peak Body for Valuers conference a couple of Fridays ago. We had a presentation by the guys from Deloitte's, entertaining. Kind of not, but a really true economist dry view of what's happening in our economy. Essentially, the point is that they're looking for increase in employment rate, wages. So where are those wages levels going?
Yep.
And immigration is still a really big one for us. So is that coming in from overseas or interstate? And what's going to bring those people here? So wages from here stay steady or they go up. They're not going down anymore. Unemployment from here stays steady or it goes down again. So we've been through the worst of that. Immigration, from a job point of view, we're all starting to hear those stories about people having to come in from interstate and overseas again.
It's hitting the news. It's back on Rick Arden on Channel 7 talking about how we're not going to have enough people for the next projects.
Yep.
But I guess the interesting point about that is it's the property market is one of those ones where once you see it, it was already too late, in my opinion. You really need to, and that's why we have this episode, because it's really important to identify and lay on the table for everyone listening what it is that we're looking for before it actually happens, so that we can be that astute investor, buy now, develop now, or renovate now, so that when we believe that time when the businesses have made their decisions, they will be bringing people in and therefore having to pay people more as well.
Yep.
We already own those properties. We haven't paid that 15% premium like we're already seeing, which we'll talk about in the future. Karratha, for example.
Yep.
They're still a good year away from those projects starting to really hit Karratha.
Yep.
But the market's already gone up 20%.
Yeah.
The rental vacancy rate's ridiculous. We'll talk about that in more detail, but I like to think of the Pilbara as Perth's leading indicator.
Yeah, potentially it is. Yeah.
Because they're the smart money. The smart money isn't just the most intelligent people. In my opinion, the smart money that moves first is the people with two factors. One, they have liquidity.
Yep.
They've been sitting on their money for the last few years. And two, they're the first people in the networks and circles and insider information. Essentially, they're the ones who have heard it first and can see it and have the context to understand how that's applied.
Yep.
So if you live in Karratha, you see the jobs starting to come through, you see the businesses start to open up again. You don't need to be that smart to realise that things are happening.
Yep.
And that's the smart money for Perth, in my opinion, because Perth's swing market, the thing that affects Perth property market, is the mining and resources industry, and that's on the ground in the Pilbara.
Yep. Yeah, and the other factor that we should really consider in terms of watching that recovery is liquidity. So we have just been through 1 year of probably the biggest crunch on credit that we're going to have in a whole cycle, in almost some people's lifetime. And by that crunch, I mean the restriction on serviceability through qualification from things like the interest rate levels. So everyone's heard about the 7.25% serviceability rate that the banks were using. Some people would not have been aware that that's how their home loan was assessed. So
I think most people, people just go to the banks and think that it's a very simple question. Can I have some money? And the bank say yes or no. They don't know why.
Yeah. And so they're thinking they're paying 5% interest rate. What's really happening is the bank saying, well, let's model this up on you having an interest rate of 7.25%. So what's going to happen now is there's liquidity returning to the market. The average increase in liquidity because of the interest rate drop and the change to that serviceability on the interest rate assessment will be around 15 to 20%, pretty much easy 20%. Now, there's some really good stats on the East Coast that show that when liquidity reduced in their marketplace by 20%, house prices followed. They went down by 20%, and that's that correction that we've seen in Melbourne and Sydney. The same follows the other way. So more liquidity in the marketplace says that people go to the bank, how much can I spend? Can I afford to spend that extra 50 or 100K? And we're talking, for the average person, we're talking about $150,000 extra that they would have to spend. So
they're just automatically, artificially richer overnight.
Yeah, they are. And it's a nice thing to think about. And, when I allude to the upgrade buyers before, there would be a lot of people listening that had gone out to try and buy something thinking that because they've had a pre-approval in the past with the bank, I can go and buy that place in the next suburb for another 150K. I'm ready to load up on a little bit more debt for a slightly better house or lifestyle or location. They then got knocked back when they went back, even though you had a pre-approval. The bank said, oh, no, hang on, we just changed the way that we're assessing your serviceability. You can't move to that property that you were thinking about. So those people need to probably
ask again.
Go back and see their broker and their banker. Go and get those pre-approvals that maybe got torn up in the past and just see where their bank's up to as well. So different banks will move at different paces here. Probably a good idea to talk to a good broker. The other factor there is, a good broker will be just going through that CRM, their list of clients, and going, right, that person got knocked back. I'm giving them a call. Flick them an email. Are you still interested in doing something? And I think the timing for our market's fantastic because we're coming out of that winter usual Perth doldrums where we all stay inside because we don't like getting wet or being cold or just can't deal with it or go away.
Well, I can't get my hair wet, Brendon, so that's a medical condition of mine.
And so good timing in terms of going into spring into September, and we all come out of our doldrums and go and have a look around in the marketplace.
And it's not just upgraders, Brendon. I think it's first home buyers that need to have that question. I guess anyone who's a first home buyer, they're the ones with the least context, I guess, as to why the banks do and don't give them finance in the first place. And it can be really disheartening if you've saved up enough money and then the banks say, sorry, you can't afford anything more than a $320,000 unit here, and you just say, stuff it, I won't even bother. So that now becomes 400 and something overnight, and I guess those dreams can now be seen out in a lot of people's minds. I really think at the end of the day, we'll look back on this time. I just personally purchased my family forever home, right? I guess I'm walking the walk in that respect. I really do believe that we'll look back on this period, this winter of 2019, with all these new economic fundamentals and macro fundamentals demonstrating theory for growth as Perth's lowest point, our darkest hour before the dawn, where there are a lot of nervous people around, but clearly fundamental reasons why things did move forward and up from that point. I know I'm obviously an optimist here when I say that, but the numbers are finally coming through, and whilst the sentiment is probably less strong than it was a year ago, the numbers certainly are stronger than they were a year ago. It's just hard to believe them, I guess.
Yeah, and I think the other thing to think about here is if you're the person that's going to the barbecue and waiting for your mate to say that they've bought a property or they've upgraded or they've moved across the highway or gone closer to the coast or the river or the hills, then that's too late because you're the second mover. And really, we're just using our knowledge, Trent, to be able to encourage people to gain some confidence. You and I have both done transactions in the last couple of years, admittedly in great suburbs, and spent lots of money and thankfully been able to rack up some really great debt.
I love
so
it.
happy
Yeah,
with my debt. So, yeah, we are talking the talk, as you say.
We're walking the walk, Brian. I think when you have both the people on this podcast both saying, look, we've recently purchased our family home, not just a small unit, but our family home, look, that's got to count for something. Yeah.
And then the other thing to consider there is timing now versus being here in a year's time. As I said before, the economic fundamentals aren't going to go crazy, but the amount of money in the marketplace will determine that prices will go up because we'll get into a competitive bid situation as supply goes down, and that will mean that the market just starts naturally trying to outbid the next buyer. and values will go up. And look, we're not sitting here talking 06, 05 boom prices. We've got a fair way to go to do that.
For that. They're just looking for some positivity in actual evidence. They just want to see, get rid of theory, Trent and Brendon. I just want to see my house going up or the house next door going up a bit more than it was last year. I think that's where people are at right now.
Yeah. And also the attraction is if you're buying now, you should be getting in at the cheapest price that suburb's going to be for a long time.
We want it to be. At the end of the day, the evidence that I'm seeing right now, it's the foot traffic. And when I went out to a property that was a very simple house behind a house split in Dinella last Saturday, I thought, might get in pretty easily here. It was 11:05 and there were already 11 cars.
Yep.
After in that 5-minute period at the front of that house.
Yeah, yep.
So people are clearly thinking about property. I think that's why the numbers, for example, on this podcast are continuing to rise so quickly. People are thinking about property. They're interested in property. The reality is, and we can't sugarcoat it, it's just that there's just so many people waiting, so many wildebeest waiting on the edge of the river ready to cross. Who's going to cross first? That's sort of, I think, where we're all at. And I think we're going to look back on that time and go, that was the time you should have crossed, mate.
Yeah, actually, and you've jogged my memory. I did have the pleasure of driving past a couple of home opens that were about to open, so I could see the agent down the road putting their signs out.
You're going to talk me about Safari, Brendon. I was excited.
And then I drove past the home that was about to be opened, and it was 5 minutes to the hour, and there was 3 or 4 people sitting on the front wall and cars parked outside. And I thought, wow, that's really cool to see.
So spring's coming. We'll end this podcast. What a fun chat it's been anyway.
Yep.
And it'll be interesting to see again when we have this next update, whether it's maybe 6 months from now with you on Perth and that CBD market, where our sentiment is after Christmas and how life's looking with no Royal Banking Commission, no Bill Shorten, rental prices increasing, people starting to get employed by the miners and resources companies for the upcoming projects, and hopefully people selling properties for prices they want to sell them for.
Yeah, and we'll all be looking back with a bit of ScoMo in our minds, going, how good is property?
Yeah, how good's property? Thanks, Brendon. Okay, Suburb Spotlight time now. We are talking about Leederville, and our number one agent is Ingrid Bradshaw from the Property Exchange. Ingrid, thank you very much for your time this morning.
Thank you, Trent, for inviting me in.
Leederville, it's one of the coolest suburbs in Perth. I think it's got a lot of potential still, even though it's got so much history. Can you tell me about where Leederville started and why, and I guess some fun facts? I'm really interested to learn a bit more about this cool suburb.
Sure, Trent. So Leederville was named after William Leeder. He was the original grantee of the land in the 1830s. And he came with his family, his 5 children and his wife, and managed to get a grant of 288 acres east of Lake Munga, where he was able to buy the land and develop it and get the grant.
Good on him. Hey, half his luck, 288 acres.
Yes, that's pretty well the whole of Leederville.
Yeah, I wouldn't mind that.
So this land was predominantly wetlands, and it was used as dairy, poultry and market gardens. And in 1895, at the beginning of the gold rush, there was a lot more private subdivisions that started occurring, and Leederville officially was gazetted as the Leederville Road District. That's how it actually got its name, and it became into its own from there. We had trams in 1897. There was a lot of migrants, and obviously that came in, so the history of Leederville is vibrant and colourful, and we have Italians, Macedonians, Greeks, and there's a lot of property in Leederville that's still tightly held by those residents. In fact, the average length of time for people to stay in a property in Leederville is 11 years, which just goes to show that people really enjoy living there. It wasn't really until the 1980s and 1990s that Leederville really came into its own.
Why is that? What changed?
What changed is, I think it's a lot of the older people started to leave and the young people came in and started to redevelop, renovate, subdivide, and all of this change started to occur.
Bit of density.
The
cafe strip.
The cafe strip, absolutely. All the it started to become cosmopolitan. The post office that was 1897 turned into a cafe. The train station in 1992 came in, and the whole strip changed. It became a hub for people to go to live, and of course the proximity to the city with the trams and people able to almost essentially walk to the city, which obviously is a great draw card, and it really became incredibly valuable. Prices and property prices, 1980s, 1990s, Leederville came into its own. It's definitely a formative year.
Isn't that a fantastic example when we're looking today, and I'm always harping on about structural and cultural change is the biggest driver towards change in values in a suburb. And it's hard to explain it because people can't see it yet. But you can look back at places like Leederville that were very functional places 50 years ago and then see that step change in infrastructure of bringing through the cafe strip, bringing in the train station, increasing the density, and bang, prices go through the roof. Why? Not because it's a much more valuable place to be, it's because it's a much more interesting and vibrant and useful place to live. It's all about utility at the end of the day. If we have the access, that walk score for the play, for the work, and for living as well, then what else can you want? And a big step change is what you have just exemplified there.
Exactly. And, you know, it's not a huge suburb. It's only about 1.5 square kilometres, Leederville, and it's only a population of 3,000, around about 3,000 people. The median age in there is around 33. So there's a lot of young people that are coming in. There's still quite a lot of singles. There is really something for everyone in terms of housing types, and that's another thing that's incredibly attractive about Leederville is that it's not just houses that it offers. It offers units, townhouses, duplexes. There's something for everyone, and that's what I think has made it incredibly attractive.
It's of a high spec as well. People haven't gone in cheap in Leederville, and because it took so long for Leederville to have that density increase, you didn't have those old BGC flats of the 60s there. Or if you did, I'm not seeing them anymore. You've really got a good spec of high quality townhouses and apartments where they have been upgraded over time.
That's it. And there's a lot of young, dynamic people that have come in and absolutely renovated, redeveloped, rebuilt, and transformed some of these older homes and these land holdings into really quite dynamic properties that has made the suburb incredibly exciting to live in.
Hey, we hear a lot about Beaufort Street and the struggles it's having. Leederville hasn't been immune to that, but at the same time, it doesn't seem to have suffered as strongly as Beaufort Street when it comes to the cafes closing and shutting every second week.
Okay, I think that's related to the business owners being really connected and the community supporting the shops. It certainly hasn't been immune. I know the Leederville bookshop has closed after 22 years, which was, for me, incredibly sad. But I think that it's difficult times for retail. And however, I just think it is about the local community supporting these strips. And Leederville, yeah, absolutely, it's ever changing. There's always something new happening there.
They're always spending money on the area as well.
They're always spending money. The City of Vincent's been
really
really
a forgotten part.
Dynamic,
yeah,
and that has also really helped.
Yeah, I think keeping that dynamism, upgrading the paving, for God's sake. There's always something going on in Leederville to upgrade the area, upgrade the amenity, give the kids somewhere to play, reducing any areas of possible crime or delinquency in the back alleys and whatnot. I feel safe when I'm in Leederville, and I also feel like I can have a good time at my own level, whether it's at a nightclub or it's at Sienna's or at Greens & Co. Any level there, you're not stuck just going to party or just going to have a coffee. You have many opportunities to see where the night takes you, and I think that's a fantastic part of what Leederville has to offer, and that's probably a lot of people in those early 30s who want that optionality.
Exactly, and it's dynamic, and it's because it's a small cafe strip. It's not spread out, so you can walk 30 metres and be in a completely different destination. And it is ever changing. That strip changes all the time, and that keeps it dynamic and alive.
So tell me, what's an archetypal buyer from you at the moment in Leederville? Is it a young professional couple? Do they have kids?
Professional couples are very much a big part of the Leederville demographic in terms of what they're looking for. We are getting a lot of empty or downsizes or right sizes, as we call them now, looking for properties that potentially have bedrooms downstairs or single level or something that gives them the vibrant location lifestyle that they're wanting, proximity to the city, but they want a nice home as well. So
we're definitely getting in their late 50s, early 60s.
We're getting plenty of those. So it's not just young people, it's also the right sizes that are coming in and really wanting to live the Leederville lifestyle that that everyone's been accustomed to and loves.
Cashing in on their hard work.
Cashing in on their hard work, absolutely, Trent. We're also getting, first home buyers that are...
What are they buying? What can a first home buyer afford in Leederville?
Well, you can actually afford a 2-bedroom apartment, in the 200s. There are some there, but predominantly they're looking at up to $500,000. So you'll get a townhouse, 2-bedroom townhouse for that. So, and there's lots of new apartments obviously around. So there's quite a lot of choice for first home buyers in and around Leederville. And of course, they're all busy, which is typically the trend for first home buyers has been that they're so busy, they all want new, they all want, something smart and slick. They're not interested so
Very
much
true.
in renovating.
They want the finished product.
They want the
lifestyle.
finished product. They want the
buy
lifestyle. They buy the lifestyle. They
Yeah.
buy the location. And this is what Leederville absolutely is a standout suburb for.
Let's run through the price points as we always do. What's the cheapest thing you've sold in Leederville in the last 12 months?
A two-bedroom apartment in Leederville in a group of 40 was in the 300s.
In the 300s.
Yeah.
Okay, so it's accessible to a first home buyer. If I want to have a family home, what sort of area in Leederville? I guess that's closer towards Mount Hawthorn, further up Oxford Street.
Yeah, probably the larger blocks, probably a little further away from the cafe strip. If you're looking for a family home, you're looking at over $1 million to get something that's 3x2 for sure.
Yep.
If you want a half a block, a subdivided block, sure you can look under $1 million, but essentially it's over $1 million to get something.
So we're really
that's on a
looking
generous land size.
around that plus or minus mil space. If you're looking for that home that is a
renovated home.
It's a good 10, 11 year turnaround home. You're looking around the $1 million mark.
You are. You might pick up something that needs work on a large block in the 900s, but essentially if you want something that's renovated, that's all done, you're looking over $1 million.
It's a big step change, isn't it?
It is a big step change.
Going from the 300-400 for the apartments and then mil. Is there anything between? Is it a townhouse?
Oh, absolutely. There's definitely there's quite a range actually. There's some older style really cool 3x2s, and then there's some brand new 2x2s that have been done really well, townhouse style. So there is quite a lot of choice and quite a range of housing that's available for buyers in the sort of between sort of $650 and $850. There's quite a lot, and that's a really popular price point for buyers.
Where's
that's
the value
a hot market.
though? Is that the value right there, you think, in that space? Or is
think
it the $1 million, you pay the money and you get something good?
I think it depends what you're looking for. I think there is a lot of value in that $650 to $850 range, and I think it's quite a hot market at the moment. I think it's because people are preferring to get 2 bathrooms if they can and 3 bedrooms as opposed to 2 bedrooms. They want something that's more done because no one has time anymore. Everyone's busy. So, that market is extremely hot in the area.
And how expensive can it get in Leederville?
Can get over high ones to, I'd say high ones is probably, the higher end of Leederville.
Because you don't have those mega blocks in Leederville, really, do you? A lot of it's the old post-war blocks where they maxing out at the quarter acre. Most of them have been subdivided already, decades ago. So it's hard to get those mansions in Leederville, a few and far between.
There are a few, and they are tightly held, I would say. And, the larger blocks, if you get anything over 600 square metres, that's considered a large block.
Yeah.
There's plenty of 400s, 300s blocks in Leederville, but the larger blocks, there are some 800 square metres and there are some, some obviously larger blocks, but they're very tightly held.
Well, that segues into our next segment, and that's always subdivision and property development opportunities. Now, I would have thought that it's generally pretty hard to do much with 300-400 square metres. So, Ingrid, is there much going on in terms of opportunity that you see in the market that you sell for a property developer to come in at a mum and dad level? Or if not, do they have to be that institutional developer who's maybe bringing 3 or 4 blocks together and putting an apartment building along Oxford Street or the surrounds?
I think there's still opportunity for the mum-dad investor in Leederville to pick up a development site and maybe do a 2-lot subdivision, or I think there still is definitely opportunity there.
Where is that opportunity? Is it near Britannia Reserve?
There are certain streets where they offer R60 zoning, and that's sort of closer towards the cafe strip end, where you could potentially do something that offers a grouped house development, and it is also away from the Oxford Street cafe strip. There's development opportunity as well on larger blocks where it's R40 and they're sort of larger 600 odd square metre blocks. Absolutely, but there's not as much opportunity as I think there's been in the past. I think there's definitely been a lot of infill in Leederville, and that's certainly meant that land's hard to come by.
It seems like it's been done. A lot of it's been done already, at least for this generation, before it starts to get to the next step, the next mega level of apartments.
And that is predominantly happening on the main roads. On the Vincent Street and Oxford Street have, particularly Vincent Street has been a complete transformation. I mean, Vincent Street in the 1990s to now is almost
unrecognisable.
Yeah, unrecognisable for what, the 5-storey development.
Views of Leederville Oval, listening to the sign every Saturday morning.
It's just incredible. And Oxford Street's a little similar. That's linking the district centres of Mount Hawthorn and Leederville, but that's changing as well, with respect to development development. But the primary developments that people are preferring are the group developments, you know, in terms of the small lot developments. There's still some opportunity in Leederville for that. It's harder to find, and they're very much hotly contested, those properties, when they come on the market, but they still exist.
Quick one, and this is more for my interest. I've always wondered, what's going on behind the Luna in terms of that development there? What exactly is that? Is it apartments? Is it townhouses?
Is that the old drill hall, the RAAF?
I think that is what it is.
Yeah,
Can you explain
it's incredible,
the lifestyle
the history
of that?
there. Yeah, look, that's a Cape Bivard development. It's an apartment complex. I think there's 72 apartments in there, and there's also some commercial properties that are on the fringe around both Oxford and Vincent Street. It's been an incredibly successful development, and in fact the landscaping inside is Tim Davies landscaping, and it's beautiful, the gardens, and they've been maintained beautifully. The complex has a pool. It's essentially two bedroom apartments, 2 and 3 bedroom. There's a mix of apartments in there, but it's very vibrant. It's great. There's a lot of tenants. It's safe because it's a security group, so you have secure car parking. There's a couple of different entrances to get in and out of there, but it's incredibly popular for tenants and investors. There's a lot of investors in there. There's a lot of rentals in Leederville.
Have you noticed rental prices increasing?
There's definitely been a shift in the rental market, and it's great to see because we had the vacancy factor at 7.2% in 2017. It's now down at 2.8%, and it's great to see because obviously that's putting pressure on rents, so prices are going up. So that, you know, there are less rentals available. The rents are going up, they're being rented more quickly, and that's actually great for the property market because it's also assisting people to decide to choose to buy rather than rent. For a long time when rents were low and there was so much competition there, they were just like renting and not even considering buying. Yeah, exactly. Why would you rent? Why would you buy? Yep. And now, of course, this is good for the market because we're going to have more people coming into the market deciding to buy and not continue renting.
Yeah, okay. All right. Median house price, what is it?
$882.
What would you do, Ingrid Bradshaw, with $882,000 in your pocket in Leederville today?
I would buy a house on a larger block with potential for subdivision, potential for renovation, and then I would sit on it, I would renovate and potentially look at subdividing, and I would also consider the location and the street. What
is the premier location street in Leederville then?
That's a difficult one. There are many. And
we're talking about your favourite.
Okay. I like Galway Street. I think Galway Street it used to be lined with peppermint trees many years ago, and then unfortunately the council came in and cut them down, much to the residents' horror. But I can see they are coming back now. There are some more peppermint trees in the street, so it's certainly starting to recover to the tree-lined, beautiful street it was.
Where is Galway Street?
Galway Street it's about 500 metres north of the Cafe Strip. It runs perpendicular between Oxford and Loftus Street. It's very close to the Burke Street roundabout, on Burke Street and Oxford Street roundabout.
Okay, all right. So smack bang in the heart of Leederville.
Smack bang. It's very central.
Very close.
There are
both strips really, Mount Hawthorn and Leederville.
That's it, Trent. And there are other streets. I don't really have a favourite street. I like Galway Street, but I also like there's quite a lot of streets in Leederville. They all have their own quirk about them, and they're all very much community-oriented streets, which is what makes Leederville such a fantastic suburb.
Ingrid Bradshaw, thank you very much for coming in and chatting Leederville. I would have thought that in a year's time when we're talking again, this will be one of the front runners in terms of rental growth and also a bit of value growth too.
Absolutely. Thanks, Trent.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!